Yeah, absolutely. Yeah. Thanks, Maya. Hello, everyone, and thank you very much for attending today's presentation. I'm going to speak about insider fraud in insurance industry, and hopefully you will enjoy the topic. So let's first start by understanding what fraud means in the first place. Fraud is a serious crime characterized by intentional deception or misrepresentation for personal gain. And that gain can be financial or non-financial. Non-financial could be like ego or revenge. And financial, of course, can be like greed or the need for money, or difficult financial situations that would then force the perpetrators to commit fraud. And fraud often involves cheating, stealing, manipulations, misrepresentation, falsification of facts, and also the concealment of truth. Regarding the types of fraud, there are various categorizations of fraud in the literature, but I do prefer to classify based on perpetrators and victims, just because every crime, fraud crime, includes perpetrators and victims at the same time. So based on that, we can say that fraud can be categorized into two broad categories, which are fraud against individuals or fraud against organizations. And when we think about fraud against organizations, fraud can be committed by insiders like employees, directors, managers of the organization, or by outsiders like suppliers, like customers, like dishonest individuals, or like hackers, for example, or maybe organized criminal groups. So today's focus is going to be on insider fraud. So we're not going to deal with the other types of fraud. So let's try again to understand what's meant by insider fraud. As I mentioned earlier, insider fraud is one of the forms of fraud committed by insiders or internal individuals working for an organization against their own organization. It can include employees, managers, or directors. And in some cases, some or all these parties collude together to commit insider fraud. So the organization would be the victim in that case. The problem with insider fraud is it's really most common in many industries. And it's a double hit because the enemy comes within the organization. So it's not just about the financial losses, but also there is a violation of trust, reputational damage, a shock that an employee that has been trusted violated that trust and defrauded the organization. These are like the broader forms of insider fraud, and each one of them has various categories. So insider fraud includes asset misappropriation, which means the theft and abuse of assets, and also financial statement fraud, which can be known as financial reporting fraud, meaning manipulations into financial accounting and records, and corruption, which is the abuse of position for personal gain. Let's look at insider fraud methods in the insurance industry, and how they can be perpetrated or committed. Examples here would include falsifying claims, for example, where employees create fake claims for non-existent policies, pocketing the payment, or collusion with policyholders to overstate their claims, and then a commission can be paid after that to the dishonest employee. Another way is collusion with other third parties, like collaborating with repair shops or medical providers to inflate costs and share profit. Or even insiders can collaborate or collude with outsiders to make up like an accident, a fictitious accident, and falsify the claim based on that. Other forms of insider fraud can also include policy manipulation, where in that case, the employee or the manager inside the organization can manipulate the processes to approve high-risk policies for personal gain, or maybe also backdating some policies to collect premiums for claims that hasn't been covered. Data manipulation is another example where they can alter policy details or claims for personal benefit, or stealing the policyholder identity as well.
Other forms of insider fraud can also include bribery. Sorry, the slides moved there. Includes bribery, receiving payments from suppliers for directing business, or accepting bribes to ignore fraud or favor claims. Asset misappropriation, which I mentioned earlier, is the theft and abuse of assets, can be done in various ways in the insurance industry, including diverting premium payments to personal accounts, or creating fake or ghost employees to create salaries or to collect salaries. And fake employees can be actually created in various ways, whether you include employees who don't exist on the system, or perhaps to fail to take out or remove legitimate employees who have retired, for example. Or perhaps you could use legitimate employees and then change like a few letters in their names to make it go unnoticed. Another form would be submitting fake or inflated expense reports for reimbursement. Other forms of insider fraud in insurance could be cyber fraud, where insiders may exploit their access to steal sensitive data or manipulate systems for personal gain, or they can collude with hackers as well. Financial reporting fraud can be committed in various ways, but an example here relevant to the insurance industry could be intentionally leaving out critical information from reports or documents to manipulate the outcomes of those reports, or manipulating the financial reports or the financial statements. Let's look at some real insider fraud cases in the insurance industry. We have here the case of Aviva Canada in 2017, where one of the company's employees was involved in a scheme where they manipulated claims data to approve fraudulent claims. And the employee in that case colluded with external parties to process false claims for personal gain, leading to significant financial losses for the company. Another case here is State Farm insider fraud case in 2019. And State Farm is a large insurance and financial service company based in the United States. An employee at this particular company was implicated in a fraud scheme, submitted false claims, altered documents to approve fraudulent claims, worked with external parties to exploit the claims process as well. Cigna insider fraud case that also happened in the US, but it is more recent in 2020, where an employee at the company was charged with identity theft and fraud after using customers' personal information to create fake insurance policies. The insider fraud involved submitting numerous fraudulent claims as a result. Let's now discuss fighting insider fraud by understanding its root causes. It's very important to do this root cause analysis. It's very important to understand the psychology of fraud criminals. Why they do what they do. So there are various theories in the literature and various fraud factors. However, I'm going to focus more on the fraud factors because it's more practical and it's more likely to resonate with you. So there is an agreement or a consensus in the literature that the factors you see in front of you can enable many fraud cases, not just insurance fraud. And that includes motives to commit fraud, the opportunity to commit fraud without being caught, low integrity level or no integrity level, the ability to rationalize the fraudulent act, and certain capabilities or traits, which we will cover shortly. Regarding the motives for fraud, I say motives are key antecedents to fraud, and they refer to the underlying reasons for or incentives that drive individuals to engage in fraudulent activities. And motives could be financial, such as greed, financial need, or difficulties, or non-financial, such as revenge, ego, or even ideology. The opportunities for fraud, however, refers to the factors or circumstances that make organizations susceptible to fraudulent acts or make it easier for fraudsters to exploit them. Usually it comes about weaknesses in the organization internal control system, lack of awareness, or inadequate protective measures. Integrity is a very important factor here, and it refers to the quality of being honest, fair, and morally upright in one's actions, decisions, and behavior. Simply stated, it's about doing the right thing even if no one is watching.
And usually people who have high integrity, they are less likely to rationalize fraudulent acts or unethical behavior. However, people with low or no integrity are more likely to commit fraud and also rationalize it. Organizations committed to an integrity culture has zero tolerance for fraud and abuse, and that usually is one of the preventive measures that organizations are advised to follow in order to mitigate fraud risk. Rationalization of fraud refers to the cognitive process by which individuals justify or excuse their fraudulent actions to themselves or others. Why they do it? Because they need to feel good about it. They don't want to feel like they are criminals. Perhaps they are first-time offenders and they don't want to feel that sense of guilt. However, it's very important to know that not every fraud perpetrator would need to rationalize their behavior. Some people are dishonest naturally, really, and they don't care if they do something wrong. They know what they're doing is wrong and they do it anyway because they have this pathological desire to commit a crime and harm others. So all what they will be looking for is the opportunity for fraud. The motive will be there, always there, which is the desire to harm people. Some examples of rationalization could be, I'm not stealing the organization's money, I'm only borrowing it. Or I only need to feed my family, I'm not a thief. Or everybody does it, why can't I? Or they threatened me badly, they deserve it. I'm only taking my fair share. These are just some examples that people can use to rationalize fraud and unethical behavior. The last factor here is the capabilities factor, and it is based on the assumption that people with certain capabilities or traits are more capable of committing fraud. We assume that when people have motives and opportunities for committing fraud available for them, they are going to go straight away and commit fraud. However, the reality is some types of fraud require certain traits, like, for example, good knowledge of accounting. Think about financial reporting fraud. Who's going to be more capable of committing financial reporting fraud unless this individual has good knowledge of accounting? It's very complicated. So you need to have good knowledge of accounting to be able to manipulate the financial statements and also manipulate the accounting treatments in a way that would enable you to conceal or cover up the manipulations that happened in the financial records. Also, good knowledge of internal control weaknesses in an organization. Those who understand very well the loopholes or the weaknesses in an organization internal control system will be in a better position to commit fraud without being caught. And that's why don't get surprised when you find someone who has been in the organization for 5 years or more committing fraud and violating the trust, because these things also take time. So perhaps this individual have always been dishonest, waiting just for the right time to have a better understanding of the organization's internal control weaknesses in that case. Power within the organization and the ability to override internal controls. In some cases, if, for example, the CEO or the chairman of the board or a top executive are actually dishonest or having low integrity, they can override any strong internal control. The power within the organization would even allow them to create their own opportunities. So what they will be looking for then is not necessarily the opportunity for fraud, because they can create that themselves or override existing internal controls, but they will need the motives, and the integrity level then would also either enable them or discourage them from committing the fraudulent act. Finally, confidence that the perpetrator will get away with the crime even if caught. And that's why accountability is very important. If you gave employees in the organization the feeling or the message that you can get away with a crime, they're going to do it. And it's as simple as that. So there has to be strict penalties in place in order to discourage people from committing a crime. So now let's talk about why is insider fraud perpetrated in the insurance industry, how the factors I've just discussed look like in the industry, in the insurance industry. Financial incentive. High sales targets and bonuses can drive employees to commit fraud, especially if they think they won't get caught, and also if they're for example, performance is tied to certain financial targets, that will be a motive for them to commit the fraud. Revenge. Employees mistreated or underpaid may commit fraud out of resentment toward a perceived lack of fair compensation. Also, weak internal controls, poor oversight, ineffective monitoring, and inadequate segregation of duties allow insiders to commit fraud more easily in the insurance industry. Also, access to sensitive information. Employees can exploit confidential data, including customer details and internal processes for fraud. Also, the complexity of insurance products, complicated policies and claims allow insiders to manipulate systems without detection. Cultural factors could also be an enabler to fraud in the insurance industry, like a results-oriented culture over ethics can create an environment where insider fraud is tolerated or ignored. Also, lack of awareness and training, inadequate training on ethics and fraud detection can leave employees unaware of the consequences of their actions and the importance of compliance. Notably, I could not really find professional insurance reports mentioning insider fraud at all, which indicates that, I mean, the focus is more on external fraud in holders of insurance policy trying to defraud the insurance company. And it makes me worry when there is no awareness inside the organization about insider fraud, no mention at all in the report. And people say, oh, it's not happening within our organization. It makes me realize straight away that they are in great danger of insider fraud or internal fraud. So let's now talk about fighting insider fraud in insurance. There are various ways to do this, but I have highlighted here the most important ones from my perspective based on my research experience and also my experience as certified fraud examiner. Tone at the top is very, very important. And when we say tone at the top, it means the control environment, the message that is delivered from the very top of the organization, those involved in governance or charged with governance, like the board of directors, top management, have to reinforce ethical values throughout the organization. They can do this by upholding integrity themselves, walking the talk, because employees are going to follow their leaders no matter what. You can't be talking about ethics and integrity and then commit fraud or mistreat people, because that tells a lot about your values. Code of ethics with zero tolerance for insider fraud is very important. Not many code of ethics would highlight insider fraud as a problem or fraud in general as a problem, and this is something that need to change. There should also be like a definition of fraud, what it means, the consequences of fraud, how people can actually report fraud, and also rewarding integrity and ethical values to encourage more people to commit fraud. To discourage people from committing fraud. Also fostering an environment where ethical behavior is valued and encouraged, ensuring fraud is not tolerated in the organization, encourage open communication about fraud risk and the importance of reporting on ethical behavior, clearly outlining the consequences of committing fraud, reinforcing that violations will result in disciplinary action. And this sort of communication should not be only through the code, but it should be through ongoing training, communication through various ways like newsletters, podcasts, even simple emails sent to staff throughout the year to remind them of like good stories, best practices in identifying fraud, or enhancing the integrity within the organization, as well as shaming and blaming anyone who would actually commit fraud. Raising insider fraud awareness through continuous training and communication, as I mentioned before, creating safe and confidential ways for employees to report suspicious activities without fear of retaliation. And that would happen when you have anonymous whistleblower line with assurance that it's actually anonymous. So employees must believe in the system, have faith that if they reported fraud and any unethical behavior, they are not going to be retaliated against. Also, facilitating the whistleblower process would be very important in that case, because if the process is complicated, no one is going to bother by reporting it. People will say, why would we waste our time? Also, sharing what has happened with the cases would be important. You don't really have to mention the individual who reported it, because it's anonymous anyway. But if you did not report anything about it, what sort of actions have been taken, people will lose faith in the system. So you need to actually communicate how did you progress the reports. Ensure also that employees feel valued and fairly compensated to reduce resentment that can lead to fraudulent behavior, because the way you treat people can increase the motive to commit fraud as well as the rationalization. For example, if you are treating them without respect and unfairly. This can be a motive for committing fraud, as well as a rationalization for the fraudulent act. And this reminds me of a case related to Amazon that happened during the pandemic, where one of the employees at Amazon, he sold customer data to cause huge reputational damage. It wasn't done for financial gain or anything. And during the investigation, he said he did it to get back at Amazon because he was working really hard. Everyone knows, like, Amazon, ridiculous working hours and the way they treat employees. However, he received a promise to get promoted for his hard work. But then, unfortunately, he found himself on the list of redundancies instead of getting promoted. And of course, he decided to take revenge by revealing customer data to an organized criminal group, not for financial gain, but to cause massive reputational damage. This shows you how important it is to treat employees fairly and with respect, and also to design the internal controls around the fraud factors that I've just discussed. Highlighting and rewarding employees who demonstrate integrity and ethical decision-making would be very important, because positive reinforcement have actually a stronger impact than penalties, and will encourage others to do the same. Act decisively against any instances of fraud to demonstrate commitment to combating the insider threat. For example, the penalty has to be really strict, prosecuting the fraud criminals instead of just dismissing them, because if you did not prosecute, there will be no criminal record. This individual will move on to another organization to defraud it. And even if the other organization did like background checks, they're not going to find any criminal record. So you're not only providing an opportunity for that individual to defraud the organization, but you're sending a clear message that commit fraud and you can get away with it by just a dismissal. Try also to limit access to sensitive information based on job roles, and regularly review who has access to critical systems within the insurance industry. Establish clear policies and regular audits to monitor employees' activities and transactions, and particularly regularly audit claims, processes, and financial transactions to identify discrepancies or signs of fraud. Appoint an internal auditor and engage an external auditor as well to assess the organization's controls and fraud risk objectively. Use technology to detect insurance fraud, things like data analytics to identify unusual patterns or anomalies in claims and transactions. That's it for today. I hope you enjoyed the presentation, and I'm happy to take any questions.
Thank you, Rasha, for such an interesting talk. Does anybody have any questions?
Hi, Rasha. My name is Janani. Sorry, I can't have my video on today, but I thought that was a very, very interesting presentation. And there's probably a lot of questions, but my question would be about the use of AI. Do you see the use of AI bringing in some change in the landscape of insider fraud detection? Do you know of any cases that have been successful and could be used perhaps as best practice going forward?
Okay, well, this is an excellent question, Janani, so thank you for that. First of all, do I see opportunity in the use of AI in preventing fraud and detecting it, insider fraud? Absolutely. Do I see any kind of cases highlighting this? Not really, because I don't see any acknowledgement that even insider fraud is happening within insurance. There is a lot of focus on external fraud, meaning that fraud that the organization is being targeted by externals, such as policyholders or suppliers, maybe cyber criminals or organized criminal groups, rather than their own insiders. So up till now, I'm not aware of any cases in that.
Thank you so much. I do have one more question, but I'm going to wait and see if anybody has a question, and they can go first, and I'll ask my question next.
Sounds great. I think Robert has a question. Go on. Thank you.
Yeah, I guess based on what you just said about most of the attention seems to be on external fraud, I was curious to know whether or not there are estimates on the cost associated with internal fraud cases, whether on a per year basis or otherwise, from insurance companies. and also whether or not they're seeing any increases in those type of cases. Because in my observation, I think financial crimes in general is seeing a sort of increase over the last several years or so, particularly through digital-based channels.
Sorry, can you clarify your question, please? I agree with everything you said, but I don't get the question, sorry.
Yeah, so one, are there estimates on the cost associated with internal fraud for insurance companies? And has there been any sort of observed increases in those cases over the last several years?
Okay, I personally have not found anything apart from the ACFE global report that touches on several industries, but this is there are only a few cases there, and that doesn't show massive financial losses, to be honest with you. The collective losses out of insider fraud from various industries would be a lot. We're talking about billions of pounds every year, but in particular, the insurance industry case was very interesting for me because I found really hardly any acknowledgement that insider fraud happens within in the insurance industry. That's in comparison with other industries I'm well aware of, you know, like the public sector, for example, particularly here in the UK, NHS, even the, you know, in policing worldwide, hospitality, the tourism industry, and the football industry. There is more acknowledgement about insider fraud and the cost of that. But in insurance industry, unfortunately, there aren't any information apart from the ACFE report, which is the Association of Certified Fraud Examiners. If you're not aware of them or the report, I'm happy to share that with you later, or send it to Maya and then she will send it to everyone.
Sounds good. Just as a follow-up, so you said there's not been a lot of acknowledgement of internal fraud cases. Now, the three examples you gave earlier had sort of combination of external and internal. So I guess the three of them seem to have been centered around fraudulent claim submission. So externally and then internally, some sort of insider person that I guess supports the I guess propagation of the fraud. So is it the case that perhaps many of those cases are like that, and so they're typically identified or acknowledged as external fraud, or is there more sort of maybe some action by companies to try and protect their brands by not maybe revealing some of the insider cases?
Yeah, this is an interesting point, and I agree with you. I think the reputational damage will be the drive here for insurance companies not to show that. The cases I've shown are purely internal fraud cases, with the exception of one of them where the employee colluded with an external party. So that would be like in an agreement with an external party, but usually insider fraud happens when someone inside the organization commit the fraud. I did not find any acknowledgement about insider fraud, to be honest with you, in the insurance industry. However, I looked for these cases which indicate that they are happening. And this will take us back to the point you've raised about why are they trying to hide it. It could be because of fear of reputational damage, which will not be really new. Generally, many organizations, or whether they acknowledge it or not, they don't really like to say one of our employees is actually a criminal. And this is the main problem. But the more we talk about it, the more we raise awareness, because if you said to everybody within the organization that everyone is honest, they're not going to be looking at each other. They're not going to be looking at red flags internally, or even justify budgets to do continuous fraud risk assessment to identify if anything is happening. And of course, it's really a double hit crime here, insider fraud, because the enemy comes from within the organization. And if the insurance company doesn't reveal it, try to cover it up because of reputational damage, we will always be talking about external fraud, assuming that everyone working for an insurance company is being honest and not committing fraud, which is unrealistic.
Right. Thank you.
Yeah, I think Janani has one last question for Rasha.
Yes,
Yeah,
thank you. So with the rise of remote work, I would imagine that insider fraud has probably evolved, and it has probably become more and more difficult to detect it. Are you aware of any studies or you know, any research that has been done to identify how this has evolved and what tactics we could probably use to address this?
Yeah, absolutely. Another excellent question, again, Janani. Well, I have conducted a piece of research on managing insider fraud risk during the pandemic, and I did touch on remote work and what this can do. Let's break this issue down into various things. I'm happy to share the publication through Maya then if you're interested in reading more about it, about the pandemic case in particular. So when the pandemic case happened and organizations that didn't have a workload model that would allow people to work at home, they really panicked because of monitoring. You have employees who've been there from like 9 to 5 in the office every day, probably micromanaged, etc., or at least to keeping an eye on them to see how they are doing things. So insider fraud massively increased during the pandemic, not just a slight increase. We've seen a spike in insider fraud during that period, for various reasons. First of all, lack of monitoring. Second, probably social isolation and psychological issues coupled with the way employees are treated. It's very important for organizations to focus on the opportunity of fraud and to put like monitoring mechanisms in place. However, it's equally important, if not more important, to treat employees as human. And this necessarily did not happen during the pandemic. And I will tell you why. I'll share a case that I came across. There has to be a balance between treating employees fairly with respect, making them feel appreciated and valued in the organization, and adding monitoring mechanisms and independent checks on performance to ensure that they are not selling the data to customers, etc. So during the pandemic, I came across an interesting case where one of the employees complained that her manager was micromanaging her. She worked in a bank. And it was really annoying because she felt he's mistrusting her and asking questions like, oh, show me, take a picture right now of your screen and show me the data that you're working on. And that was really suffocating for her. She felt like it was disrespectful. And this resulted in motivating her, this behavior, to actually commit fraud just to prove her point. So during the investigation, she said, I just wanted to tell him that if I wanted to commit fraud, his micromanagement and disrespectful way of treating me wouldn't have stopped me from doing that. But what stopped me is that I had integrity and I decided not to commit fraud. Unfortunately, obviously, she was convicted because of this, but it shows you how important it is to have this balance between respecting employees and monitoring them. I hope this answered your question.
It did. Thank you so much, Rasha. Appreciate it.
You're very welcome.
Does anyone have any other questions? All right, it seems that the talk was very clear and we have received a lot of interesting questions from our audience. Thank you, Rasha, for taking the time to talk about insider fraud and like sharing your insights and experiences on this pressing topic. And thank you for the audience for like such engaging questions. And we look forward to having you again for the next colloquia if you're willing to.
Yeah, absolutely. Thank you very much. Thanks again, everyone, for attending. And I will share the documents I promised to share with Maya so that she can distribute.